Joining us in the studios to help us understand what to expect from the budget and how it possibly might affect our portfolios and our equity investments is Sharmila Joshi, Head of Equities at Fairworld Security. Sharmila, thank you so much for joining us on the show. And G. Chokkalingam, the Chief Investment Officer at Centrum in his Mumbai office, joining us on the link as well. Mr. Chokkalingam, always a pleasure to have you on All About Stocks. Thank you for taking time to join us. I'm going to start with you, Mr. Chokkalingam. Tell us, it's obviously going to be a tightrope walk for the Finance Minister. He has to worry about this massive fiscal deficit. He also has to make sure he doesn't hamper growth while he increases taxes, which will subsequently possibly increase inflation as well. What are your expectations from this budget? Do you expect reform? Do you expect any sort of indication of reform at all?
My expectations are threefold. First of all, the Finance Minister has to perform well in this budget, because the next budget, which would come in FY13, is likely to be targeted towards early 2014 election. So there won't be many options for pushing any economic policy measures in the next budget, and therefore this is the last chance for the present government to push a lot of action-oriented policies on economic front. Therefore, we have a lot of expectations. And second, all of us know the kind of the degrowth in the growth rate happening, and also the fiscal consolidation. Therefore, there is definitely an expectation from the government to improve the tax revenues and also provide some sort of concession to particularly infra sector to usher in growth.
I also want to quickly ask you, you talked about an increase of indirect taxes. There's been some talk of general excise duty going up, of larger services, a larger group of services being brought under the umbrella of service tax. Can you tell us what sort of an expectation you have? Do you think it's going to be about 2%, which is what we've heard from a lot of other market voices?
Definitely there are two types of expectations from service sector. First of all, the fact is that service sector accounts for just about 10% of the total collections in the country, tax collections, whereas service sector accounts for anywhere from 60 to 65% of the GDP. So the time has come for the government to be very aggressive on this front. My expectation is very firmly, I believe that the tax base would be widened, that entire service sector can be brought under a negative list. They may give some exemption to select 20-30 services. Otherwise, they may bring under tax net almost the entire service activities. As far as excise duty is concerned, I don't think uniformly it would be increased from 10 to 12%, because a lot of industries are under stress. So the wise strategy could be to select certain industries which are already doing well, not impacted very badly by the current deceleration in industrial growth. For those select industries, the minister may increase the excise duty from 10 to 12%.
Sharmila, for FMCG right now, if we see that larger general excise duty increase, it would make all of these products more expensive. How do you expect it to affect the industry, and any particular stocks you think are going to take a hit?
Given the fact that ITC had just increased their product prices in anticipation, I think, of the excise duty, possibly they won't get affected too much. And in fact, I think the general expectation is that if this excise duty doesn't come through, hike doesn't come through, then in fact it should be viewed as a positive for FMCG. But yes, I think if the hike comes through, then I think the status doesn't change, because they had increased their product prices. So perhaps to that extent, ITC will be less affected. We'll have to see what kind of effect it has on lever. But then lever also has that greater flexibility in passing on price cost as compared to an ITC. I think in ITC you see that immediately getting reflected. So I would be neutral, as of now on, until I hear more about excise duty. But I think the broader expectation is that you won't see it come through for these. So in fact, people have been buying ITC in anticipation of the fact that that this move won't come in, and they've increased prices. So in fact, they will benefit.
For a long-term investor who's watching right now, if I hold ITC, HUL, Marico, any of these stocks in my portfolio, should I be concerned during the budget, or do you think in the long term for these stocks, these things will even out?
Absolutely, and I think if you look at ITC and HUL stocks, especially ITC, this is the kind of stock that is actually doubling every 3-4 years, in terms of value. Either, they reward investors. They are either having a bonus issue or, something or the other. So, and I am an ITC shareholder and I have benefited. So, I can say that, that if you are invested in these stocks with a slightly longer horizon of about 3 to 5 years, and in fact they really reward you.
What are you expecting from the OMC point of view from the budget?
I think that the ideal thing would have been, of course, that if that complete deregulation would have come and if they'd been allowed to really increase prices. Because I think, we are now caught in a situation where when prices actually come down, you don't benefit because, prices are not dropped that fast and that easily. And then when prices start going up again, you're back in the same boat and, you start talking of this increased loss that the government makes.
So from a recommendation point of view, would you go upstream or downstream at this point?
Actually neither, because I think the way the burden is on ONGC, the minute you see a bigger loss, the burden keeps increasing. Yes, since it's an exploration company and if prices go up, it stands to gain. But I think even that applies, while crude is in a certain range. And if the subsidy just keeps increasing in the manner that it is at the moment, then I really wouldn't go for either. But yes, I think given a choice, then it would have to be a CANE or an ONGC that you would look at.
So your recommendation is for now stay away from the entire
Absolutely, largely because the whole pack, largely because it is so government controlled and there is really nothing in your hand.
Alright, so stay away from OMC. Mr. Chokkalingam, I can slip in one more sector before we have to go into break. I want to ask you about the auto sector. There's been some talk also about an excise duty increase on diesel cars. Do you expect that to come in, and which stocks do you think will be hit by it most?
Since the diesel consumption by passenger car is less than 3% of the total diesel consumption, I think the government, instead of rising the diesel prices, they may rise the excise duty on diesel cars. So depends on the extent of the rise. If it is more than 30-40% of the existing base excise duty, then M&M could be impacted.
Now, for viewers who are holding that M&M stock right now, would you recommend they continue to hold it? Do you think a company like M&M will be able to ride out this change in the long term?
Definitely. If investors have a time perspective of minimum 1 year, they should hold on to it, because I have been observing it for more than a decade, the performance of the group. It has got a fantastic management capability, and also it has got a good exposure to tractor business. I always believe that the agri team is going to emerge in a very big way. So they would be able to manage this problem beyond a year.
I also want to ask you about reform. Now, after what we saw happen in those state elections, there's been a view that the government might not be able to pass through a lot of reforms because it doesn't have the kind of strength it needs from its allies and from the various state governments. Do you think something like GST will be difficult to pass through at this point?
I firmly believe that the recent elections are not that important for pushing of the reforms, except GST, because GST needs the support of individual state governments as well. The only area where few bills which need the support in the Rajya Sabha, like banking amendment bill, insurance bill, they may find little difficulty, but otherwise I don't see any difficulty in passing reform measures like FDI in aviation, FDI in multi-brand.
Mr. Chokkalingam there is still optimistic, but you were telling me in the break that you expect some sort of populist reform. Now I want to talk to you about the engineering sector that's waiting for this logjam to move on, that's waiting for the bottlenecks to be cleared, because it wants clearances then for infrastructure. Where do you see us on the whole reform move, and how well do you think it's going to move in this budget?
See, I think, that's the other area that's been neglected for the longest time, both power as well as, the capital goods space. For power, of course, it's a multi-layered issue. It's not a single, it's not going to get solved that easily. But perhaps, I think for, a lot of the road projects and other, pending projects, it's just really a matter of getting back to work. So I think, that is the reason, that's where you feel the disconnect, and which is why probably the feeling was that this budget has been postponed, so that you see what comes out of this state election, whether we like to give it importance or not, and then have the budget, because I think somewhere the fiscal deficit also needed to be tackled in a very firm manner. Now the fear is that since things didn't go their way, they may just end up really having a more populist, where you're promising people things and you give some leeway here and leeway there, rather than doing anything concrete.
What's your call right now on BHEL, keeping in mind the budget, because we have a lot of viewers who hold BHEL who are interested in the stock?
See, where the stocks are concerned, I'd be positive, very honestly, because see, at the end of the day, we are we are just about very close to a rate cut, So once you see the rate cuts happen, and probably there will be a couple, more than a couple this year, then I think with a lag period of about 6 months or so, you will start seeing things easing up for, finances easing up for these companies, because I think some of the smaller companies are also held back by the fact that, that banks are not lending to them anymore, and banks have issues of their own, with the kind of NPAs that have hit them with all these aviation and things. power and the other sectors that they've been involved in. So I think if you give some period, some amount of time for that to even out, then I think things look better for infra play. And we've seen a lot of the smaller companies get orders. In these last couple of weeks, if you see, a lot of orders have come out. NTPC, for instance, has given out orders for 11 boilers. So things, you do get a sense that things are beginning to move there. So I would be positive on a BHEL, L&T, BGR Energy, maybe
hold these stocks.
Yes, in fact, either hold or even buy some of these.
All right, hold or buy some of these. Mr. Chokkalingam, power did come up. Now, we know that all of the power plants have been going through a certain amount of below capacity production because there's less coal available to them, there's less gas available to them. We know the Prime Minister's office has been working on this problem as well, but are you expecting anything on the power sector in the budget?
Definitely. I mean, there is a chance of cutting down the import duty on coal from 5% to 0% because of the coal shortage. And also the tax holiday on, for the power generator and distributors could be extended for another 5 years. And also the MAT, which is 18.5% for these players, which is neutralizing the benefit of tax holidays, can be or possibly reduced for the power generator and distributor. So these are the 2-3 measures I expect at least one of them to happen definitely. For the simple reason that in 12th plan we need almost around 75,000 megawatt of new power generation capacity. So unless they act on these areas, it would be very difficult for the country to increase the power capacity. So I remain quite optimistic on a couple of these measures.
Let's move on now to our portfolio segment. Now, every week we pick the portfolio of one lucky viewer, and our guest takes a look at your entire portfolio and tells you what you should be holding on to for the long term and what you should be selling. Now, this week we have Dharmesh, who's written in. He has 55 shares of BEML, which he bought at 588. He has HDIL bought at 102, Jai Corp bought at 98, and Lanco Infra, which he bought at 17. He also has Reliance Media at 88. Shamila, when you look at this portfolio, would you say it's a very strong portfolio for the long term? Would you like to make some changes off the top of your mind?
I would really recommend holding on only to, I think, BML from this list. I'm not a great fan of Lanco Infra. I think if you see it bounce back to the 24-25 level, which it did in between, you should look to sell. Reliance Media is a little difficult to get a hang on because, with these stocks, you don't know. Maybe there could be a couple of deals that could, put them in the spotlight. But again, there I would reckon that if you were to get a price closer to 9,800, that's where you should be looking to exit. And HDIL, honestly, again, I'm not really too fond of real estate, but within the real estate, perhaps HDIL is okay because, at the end of the day, the slum, that SRDA project, and they have a pretty good hold of that in Mumbai, that gives them a stronger holding than a lot of the other places. So I think even over there, if you were to see, I think it's been bought at 102, so I think if you were to get a 15-20% return, that's where I would safely really exit the stock.
Says you only hang on to one of those stocks. Mr. Chokkalingam, I'm not going to let you go before getting some investment advice from you. For Dharmesh's sake, considering now he only has one stock left out of the 5, how would you recommend he diversify this portfolio? Because he seems to be leaning towards the whole infrastructure sector. Would you recommend he includes maybe banking, FMCG, or a couple of defensive sectors here? What would you recommend someone like him do? I
would recommend retail investors to hold on to, the quality stocks. They should not be influenced by the news flow. Rather, look at quality stocks like Kane India. He should have. I would suggest every retail investor is having at least 10% of the portfolio in Kane India with a 73% net profit margin. And at current market cap of around 72,000 crore, I expect that the cumulative net profits over next 8-9 years to be equivalent to the current market cap. So I firmly believe that the Care India could be stock like a Colgate of 1960s and 70s. So he should move on to stock like Care India, and also he should have good exposure to great deep value stocks in the mid cap space, something like Balma Lorry Company, which has which is available at a 5 PE and solid dividend yield stock, and also there is a possibility of multi-bagger opportunity.
Ramesh, that's the advice you're getting right now. You need to pick higher quality stocks for your portfolio. Hang on to BEML and, of course, Kane India. Mr. Chokkalingam telling you that that is a stock you have to have in your portfolio. Good luck. Write back to us if you need anything else. Remember, if you have a portfolio that you'd like for us to take a look at, you can send it to us on the email ID that's at the bottom of your screen. Mr. Chokkalingam, thank you so much for joining us on the show. It's always a pleasure to have you. We look forward to having you back soon. We must have a quick discussion on the RBI move on Friday evening when they cut the CRR. How are you reading this move?
It's obviously good news, because I think that what you do when you cut CRR is that obviously you're increasing the liquidity, and I think 75 bps is substantial. So I think from that point of view, it is going to mean, I think markets will give this piece of news a thumbs up. But I don't know what it means for the repo rate cut, therefore. That what do you do therefore on the 15th? Does this mean that you're not likely to see anything on that? Because I think that was the debate, therefore, that whether you would see anything on that. Because I think CRR were more or less a given. I think 75 bps is more than what market was expecting. But otherwise, a lot of people were factoring in that you would see another CRR cut. So I think it's good news for the banks, because I think it definitely eases the fund situation at their end, and hopefully you'll start seeing them lending more.
Alright, we have a couple of questions that have come in for you during the week. Let's take a look at some of those questions. Rajesh has written in. He's 40 years old. He tells us he has Suzlon, 5,000 shares at an average price of 35 rupees. He's telling us that he's willing to hold for 3 to 5 years, and he wants to know what he should do with that stock right now. Suzlon ended the week at 27 rupees and 50 paise. What's your call on Suzlon right now? Every year before the budget, there's some buzz about the fact that alternative energy will receive a tax boost. But do you think something like that will come through?
I don't really think that for Suzlon is going to be anything about, alternative energy getting anything. But the fact that, it's a company that is really got huge debt on their books. And yes, of late we have been hearing things from the management in of terms, ways and means in which they are planning to reduce that debt. But I think that it's simply too large, and the way they've gone about the whole thing doesn't really inspire confidence, going ahead. It is... So to my mind, really, even at 27.5 at the current price, it's really recovered from a low of about 20. So honestly, I mean, this is a tough question for me to really answer, because it's not one of my favorite stocks. But I guess, when you bought 5,000 at 35, you don't really want to sell it at a loss. So I think my only real suggestion would be that when you see markets turn, maybe sell it and try and buy it back lower, and keep doing that till you can average your price to such a level that you can exit safely. But definitely not a stock that I'd keep.
Alright, not a stock that we'd keep for the long term. Suzlon there. We have another question from Amay. He has 20 shares of NMDC, which he bought at 299. He has 20 shares of Unitech, which he bought at 248. Now, he says he's had these stocks for 3 years now, and he wants to know if he should sell them because he's at a huge loss. Unitech ended the week at 30 rupees. Now, from 248 down to 30 rupees, that's quite a loss. What would you recommend he does?
In fact, Suzlon has had a similar, or if not a worse, track record. It's just that, the investor's lucky that he bought it at 35. And he's unlucky that he's stuck with Unitech since 248. So I think precisely the same thing. I mean, perhaps for NMDC, you can make a case by saying, like the kind of news flow that you've seen on the mining industry, and, all the twists and turns that have happened, that somewhere along the way you saw a big correction coming in on NMDC, and that will correct itself over a period of time. So I think, that's a stock that perhaps you could hold on to. But Unitech is an absolute no from my end. I think he'll definitely have to book his loss there and look to make it up in some other stock.
Right, unfortunately, you're going to have to book your losses on Unitech right now. Remember, we did talk about a lot of strong stocks on this show that you can pick to replace in your portfolio. Write to us if you need anything else. You can always send in your questions to the email ID that's at the bottom of your screen. You can also reach us on our Facebook page as well. That's flashing on your screen right now. Well, Sharmila, thank you so much for joining us.